Hello and welcome. I'm Amy.
And I'm Tom.
Today we're diving into the latest from the financial markets and the global geopolitical scene. We're pulling key insights straight from today's Exante Daily Insights report.
Yeah, our goal here is really to cut through all the noise. We want to give you a clear, concise picture of what actually moved the markets, what might be coming next, and how these big world events are, impacting your financial world.
Think of it as your quick guide to staying really well informed.
Exactly.
Okay, let's get into it. We've definitely got a lot to cover. Stock markets, commodities, central banks, even some key trade talks. So first up, the big picture. U.S. stock markets looked pretty healthy on Monday. S&P 500, Dow Jones, NASDAQ, all up. The NASDAQ 100 jumped, nearly 1.5%. What was really pushing that positive feeling?
What's fascinating, isn't it, how quickly markets latch onto signals, especially geopolitical ones.
Uh-huh.
The main driver here was news suggesting Iran is actively trying to de-escalate things with Israel. That perception, that feeling of reduced tension, it directly eased a lot of the worry investors have been holding on to.
Right, so it's about the perception of risk changing.
Precisely. It shows how markets, in the short term anyway, can react more to the idea of risk than maybe the long-term fundamentals.
Mm-hmm.
For you listening, it's a reminder that jumping based on headlines can be tricky. But, there's always the other side. If the conflict did escalate, that could throw a wrench into consumer confidence, the economy, maybe even what the Fed does next. And that likely wouldn't be good for stocks.
Okay, so if that de-escalation news boosted stocks, what happened with commodities? Gold, oil. How do they react? Always interesting to track those.
It really is. And it played out quite typically.
Mm.
When that perceived risk goes down, demand for safe havens like gold tends to ease off a bit.
Mm-hmm.
So we saw gold prices pull back, dropped over 1% after climbing on Friday. Really shows its role as that go-to asset when things feel unstable.
And oil.
Oil saw a bigger drop, actually. More than 2 percentage points for both Brent and WTI crude.
Wow.
Yeah, that directly followed those reports about Iran looking to end the hostilities. Concerns about supply disruptions from the region just seem to evaporate, at least for the moment.
And digging a bit deeper there, the report mentions Iran actually asking Qatar, Saudi Arabia, and Oman to sort of nudge the U.S. president towards a ceasefire?
That's right. And apparently in return, Tehran hinted at being more flexible on its nuclear program negotiations.
Complex. But definitely sounds like a move to dial things back.
It absolutely does. And it's important context here, Amy. Host speaker. It's important context that even though there have been these strikes back and forth, some even hitting energy sites, the really critical stuff, the big export facilities, the Strait of Hormuz, they haven't been affected so far.
Okay, that's key.
Production, exports, they're still flowing.
Yeah.
Now, obviously, if the conflict flares up again, that could change things quickly for energy. But for now, yeah, that de-escalation signal definitely calmed the oil markets.
All right, let's pivot away from the big geopolitical picture for a moment. Corporate news always throws up some interesting stories, right? Individual stocks moving on company-specific stuff. What were the highlights there?
Yeah, quite a few things moving. For instance, Nippon Steel, the Japanese company, looks like it's finally set to wrap up its acquisition of U.S. Steel. They apparently reached a national security agreement with the White House. That's a pretty big deal in the industrial space.
Definitely. What else?
Then you had Warner Bros. Discovery. Their shares jumped, was it over 7%?
7.28%, right.
That was after creditors okayed a debt restructuring plan, lets them split into two separate companies.
And Roku had a huge day, too.
Oh yeah, Roku soared, over 10%. They announced a partnership with Amazon, focused on boosting ad sales, shows the power of linking up with a giant like Amazon.
Huge jump. But it wasn't all good news for everyone, was it? Renault, for example?
No, exactly. Renault shares took a hit, down almost 9%. Their CEO is leaving to take the top job at Kering, which owns Gucci. And interestingly, Kering shares shot up nearly 12% on that news. It just shows how, leadership changes can ripple through markets almost instantly. One company's loss is another's gain, perception-wise anyway.
It really highlights those different dynamics, partnerships versus leadership shifts.
Totally. Roku and Amazon, that's about building ecosystems. Renault and Kering, that's the market reacting very quickly to leadership stability or perceived talent shifts. Stuff that sometimes gets lost in the macro noise, but it's crucial for understanding specific sectors.
Speaking of sectors, which ones stood out?
Well, communication services was the best performer in the S&P 500, up about 1.5%. Warner Bros. Discovery helped there, obviously, but also Take-Two Interactive and TKO Group Holdings did well.
And the weakest?
That would be utilities. down about 0.5%. Consolidated Edison, Southern, they were dragging it down.
What about the big tech names, the mega caps?
Mostly positive there. Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla, all finished higher. Seems like confidence returned to that part of the market.
Any standouts within tech or materials?
Yeah, in information technology, AMD, advanced micro devices, had a really strong day, up almost 9%. Oracle, on the other hand, dipped a bit. And in materials and mining, Smurfit Westrock did well, but Vulcan Materials lagged.
Okay, let's switch gears again. Central banks, always a huge factor for currencies, bonds, everything really. What signals are we getting this week? Looks like a busy one.
It really is a packed week.
Yeah.
And you saw that reflected in the U.S. dollar's performance, which
Right.
was a bit mixed, actually.
How so?
Well, the dollar index itself slipped back just a tiny bit, less than 0.1%. But the interesting part is how. It actually gained ground against the traditional safe havens, the Japanese yen and the Swiss franc.
Right.
But it lost ground against most other major currencies, and the volatility in those sort of risk-sensitive currencies was pretty muted. It suggests that, despite the Iran-Israel headlines, broader investor confidence hasn't really been shaken too much.
Interesting. So what's the read-through for interest rates and bonds then, especially with all these central bank meetings lined up?
Yeah, this week is crucial. Eyes are mostly on the Fed, obviously, with their announcement tomorrow.
And the expectation is they hold steady.
Overwhelmingly, yes. Everyone expects them to keep borrowing costs where they are, but the real focus will be on their statement, their assessment of the latest economic data. We've seen activity softening a bit, but also some signs of price pressures maybe picking up again. It's a tricky balance.
And what are traders betting on for future cuts? Has that changed?
It has shifted, yeah. Fed funds futures traders are now pricing in basically zero chance of a rate cut this month in June. That's way down from just last week. September is now seen as the most likely time for the first cut, about a 65% probability priced in. And looking out to the end of the year, traders expect around 46 basis points of cuts in total, so maybe 2 quarter-point cuts by December.
Got it. And what about other central banks? The Bank of Japan made a move today, right?
They did, though it's pretty much as expected. They kept interest rates unchanged, but they did say they'll slow down the pace of their bond purchase reductions starting next fiscal year.
So a very cautious step towards normalization.
Extremely cautious, yes. It signals they're very carefully unwinding that massive stimulus program they've had for years. It also fits with the Japanese government wanting more domestic ownership of bonds. The dollar did gain against the yen on that news, though, up
Yeah.
about 0.4%.
Okay. And the Bank of England, they meet this week too.
Yep. Sterling was pretty quiet against the dollar ahead of their meeting, edged up just slightly. The market expectation is firmly for the BOE to hold rates at 4.25%.
And future cuts there?
Similar to the Fed outlook, actually. Markets are pricing in about 2 more quarter-point cuts by December, with the next one probably coming in September. And don't forget, we've also got decisions coming from Switzerland, Sweden, Norway. It's a global central bank fest this week.
Definitely keeping markets on their toes. Let's look at the bond market itself. U.S. Treasuries, yields were up.
Yeah, the 10-year Treasury yield climbed about 5 basis points, hitting 4.456%.
What was behind that rise?
Mostly anticipation ahead of some key economic data coming out later today, retail sales, and import prices. Yields had dipped a bit earlier on Monday on those Iran de-escalation reports we talked about, but then edged back up.
Then that data is important because...
Well, import prices feed into the PCE index, which is the Fed's preferred inflation gauge. Economists think import prices might have actually declined slightly in May, which would be, a welcome sign for the Fed. Retail sales, on the other hand, are expected to show a decrease month over month.
Anything else happening in the U.S. bond space? Auctions?
Yeah, there was a pretty successful auction of 20-year bonds yesterday, $13 billion worth. Demand was really strong, which helped ease some concerns about whether foreign buyers might be backing away from treasuries.
Strong demand meaning lower yields than feared.
Well, the yield was just under 5%, pretty much in line with where it was trading before the auction. But the key was the bid-to-cover ratio, which was high at 2.68. That means lots of bids for every dollar of bonds offered, a good sign. And the Treasury is selling 5-year TIPS inflation-protected securities today as well. Just a reminder, the bond market's closed Thursday for Juneteenth.
Good reminder. What about bonds in the euro area?
Yields there mostly edged down slightly. German 10-year bond yields were down about a basis point, around 2.5%.
And ECB rate expectations.
Money markets are now pricing in an ECB deposit rate around 1.78% by December. That's up just a fraction from earlier. And there's roughly a 50-50 chance priced in for an ECB rate cut in September. The current rate's 2.00%.
Any comments from ECB officials reinforcing that?
Yeah, we heard from Bundesbank President Nagel, who stressed keeping all options open because of the uncertainty. He seemed hesitant about further rate cuts soon. And ECB Vice President de Guindos mentioned paying closer attention to the side effects of their easy money policies.
Interesting nuance there. And Italian bonds.
They actually outperformed German bonds. Italian 10-year yields fell more, narrowing the gap, or the premium, over bonds.
Okay, finally, let's touch on the G7 summit. Sounded like there was some unexpected drama there, particularly involving President Trump.
Yeah, that's right. He ended up leaving the summit in Canada a day early.
Why was that? Initial reports suggested the Iran-Israel situation.
That was the initial explanation given, yeah. That the escalating conflict required him back in Washington, causing him to miss planned talks on trade and security.
Wow.
But then President Trump himself posted on Truth Social, saying something like, he has no idea why I am now on my way to Washington, but it certainly has nothing to do with a ceasefire. Much bigger than that. Stay tuned. So directly contradicting that initial story.
Huh. That's quite a disruption. A lot of missed opportunities for other leaders, I imagine.
Definitely. Leaders from Japan, the EU, Canada, Mexico, they were apparently hoping to use that second day to talk directly with Trump,
About what specifically?
trying to persuade him to ease up on some of those tariffs he's imposed. In return, they were apparently ready to offer concessions, things like higher military spending, maybe tougher actions on China, opening their markets more to U.S. companies.
Right.
And he was also scheduled to meet Ukrainian President Zelensky, plus Mexico, India, Australia, several others who aren't G7 members but were invited. They missed out on that direct engagement, too, because he left early. It really shows how geopolitics and trade are just so tightly linked.
Absolutely. But despite all that G7 disruption, one specific trade deal did seem to move forward. The US-UK one.
That's right, yes. Amidst all that, the U.S. president signed an executive order to actually implement the trade deal, agreed with the U.K.
Okay, so what are the immediate effects of that?
Well, good news for British car makers and aerospace firms, primarily. That big 27.5% U.S. tariff on cars. It gets cut down to 10% for the first 100,000 vehicles coming from the U.K. each year.
Significant.
Yeah. And U.K. exports like jet engines, other aerospace parts, they become exempt from U.S. tariffs altogether.
And what did the UK give in return?
They granted the U.S. better market access for things like American beef, ethanol, and some industrial goods. The order basically tells the U.S. Commerce Secretary to make the tariff changes official within 7 days. And it leaves the door open for future talks about potential U.S. tariffs on U.K. pharmaceuticals.
So, sounds fairly positive overall, but were there any tricky parts? Any sticking points, maybe for industries like steel?
Yeah, you've hit on a key issue there. Steel and aluminum are still complicated. The deal aims to get U.S. tariffs on U.K. metals down to zero, but actually implementing that has been slow.
Why is that?
It comes down to something called the melted and poured rule. Basically, a lot of UK steel is reprocessed from scrap or imported materials. It doesn't meet the strict U.S. rule that says the steel has to be made from scratch, melted, and poured in the UK to qualify for the tariff exemption.
Ah, okay. So it's progress on trade, but still some hurdles for certain sectors.
Exactly. A step forward, but with specific challenges remaining.
So, wrapping this all up, what does it really mean for you, our listener? Today's report, it just paints such a clear picture of this delicate dance between global politics, economic stability, how one headline can send ripples everywhere.
It really does. Whether it's watching those geopolitical tensions shift or trying to decipher what the central banks are planning, understanding how these pieces connect is just so vital for making sense of it all.
Yeah, it pushes us to look beyond the numbers, doesn't it? To ask why things are happening.
Absolutely. And to see how events that seem far away can actually touch your own financial situation, even your day-to-day life. It's all interconnected.
Well, we hope this run-through of today's market insights has brought some useful clarity to a complex picture.
Thank you for your attention.